Welcome to another episode of Equity Mates, a podcast where we explore what's possible in the world of investing. If you've just joined the community for the first time, a massive welcome. We have a great episode for you to join us today. My name is Bryce, and as always, I'm joined by my equity buddy, Ren. How are you going?
I'm good, Bryce. As always, I'm excited. You know I always open the show in that way. We certainly heard that feedback in the Equity Mates community survey. But how could we not be excited when there is so much happening in markets, in the stock market, and in the crypto market? And we're going to speak to one of our favorite crypto experts today to understand everything that's going on, not just with prices, but also with the technology and the business cases emerging underneath it.
That's right. We are going to bring Blake Cassidy into the studio. Blake is CEO of Bamboo. They are an Australian crypto micro investing app that makes it easy for anyone to invest in Bitcoin, Ethereum, gold, and silver. He's also one of the hosts of the Crypto Curious podcast, which you may have seen is part of the Equity Mates network. So we've known Blake and the Bamboo team for many years now. Love what they're doing in the crypto space and allowing Australian investors to dollar cost average into a goddamn volatile asset.
Now some crypto natives might lament that we only really focus on crypto when it's ripping.
Fair call.
And I think that is fair criticism. Well, I don't know if it's criticism,
No,
but
it's fair to focus on it. That is crypto.
That is crypto. But here's the thing. Here's the thing that we do. We dollar cost average every paycheck into the asset class.
You do.
You don't?
I can't. No.
Well,
I
that
just go to
undermines my
lump
point.
sum.
Well, I dollar cost average every time I get paid. And so we mainly talk about it on the show when it's ripping.
Yeah.
But we certainly have that long-term investment approach. And that is one thing we do appreciate about Bamboo. It's less of a trading environment where you can buy Melania coin and, you know, sign up for the soon to come launch of Baron coin.
Yes.
But Bryce, I started the show by saying I was excited.
Yeah.
Last 12 months, Bitcoin is up over 100%.
Awesome.
That's what's exciting about this asset class. Because you're right, it can fall quickly, but God, it can rise quickly as well.
Yeah, I mean, it's, at the time of recording, it's hovering around that 100,000 USD, but we've been on the ride since 2017 properly.
I bought
up and down.
So I can remember the first time I bought crypto. You guys, it's a 2017 boom.
Yep.
Just when we'd started the first year of doing the podcast. And you, Alf, and Joe, and I were in a WhatsApp group, and you guys were just trying to buy shit coins and trying to make money off crypto.
Classic.
And we were doing this podcast, we were speaking to sensible investors, and I was like, nah, not doing it, not gonna buy into the hype. Bought right at the peak in 2017, when it peaked at about $20,000 a coin. Idiot.
Yeah.
Wrote it, then just left it. Just forgot about it, just moved on with my life, focused on other things. Still have that original investment I made in 2017.
Oh, you would have done very well then.
Yeah.
Yeah.
That's been my big lesson.
Just don't sell Bitcoin.
Because it wrote it all the way down and then all the way back up into the 2021 boom.
Yeah.
Then all the way down and then all the way back up again now.
It's the easiest asset to trade.
Yeah.
Every 4 years.
Yeah, like 6 months ahead of time, everyone's like, it's about to peak.
It's about to peak.
Yeah.
As
and
we'll
halving
probably
cycle, then yeah.
And I know Blake's not going to like me saying that, but it does move in 4-year cycles, and it has done for the last 15 years. And it seems each year the cycle, well, at least in my opinion, becomes less and less violent, I would say. And we've seen some pretty amazing things happen in the industry that we'll talk to Blake about, particularly from a government point of view, in America really embracing crypto, institutions now really coming into the space, the launch of many ETFs. It's all happening.
But here's the big question that we always have. It was the big question we had when we were speaking about crypto in 2021, and it's the big question we have again today, which is, when do all these emerging use cases cross over into the mainstream? We hear about all these potential use cases for crypto being 10x better or cheaper or more efficient or more democratic than what has come before it. But what we haven't seen in the 15 years of crypto is those use cases really usurp legacy technology. It's like they're building a parallel financial system rather than actually making inroads on the traditional financial system. And so that's where we close the conversation with Blake today, because that's the question that we're really interested in. And for me, that's the question which, when the crypto world can answer in the affirmative and say, here's an example and here's an example, that will drive like true mainstream adoption.
Big time. Well, he has some pretty interesting use cases that are happening at the moment, so stick around for that at the end of the episode. But I think without further ado, Ren, let's get into it.
Let's do it.
Well, Blake, welcome back to Equity Mates.
Thank you, guys. Great to be back here. I think you only invite me when it's a bull market. So it's been a few years.
We only care when it's a bull market.
That's the only time we talk about crypto.
Yeah, we've got you locked in for another three years' time.
Yeah,
So.
perfect. Thank you, guys.
Well, let's start with the bull market, crypto in 2025.
Yep.
We're speaking in February. Bitcoin is hovering around that 100,000 USD mark. There's plenty of excitement in the space, but for those who have tuned out of the crypto story over the last few years and are interested to know where it's at, what do we need to know?
Yeah, so at its essence, crypto and Bitcoin is very cyclical, and it goes through these traditional 4-year cycles, really driven by the Bitcoin inflation rate. And this is compounded by, different, the market maturing. So we've seen the Bitcoin and Ethereum ETFs come to market over the past 12 months. I think now that has been the most successful ETF launch in history, with about $120 billion of assets under management now just in the Bitcoin ETFs, which is incredible growth, and that's really pushed the market higher and created a lot of activity and interest.
Wow.
And when you say the Bitcoin inflation rate, that's the halving cycle where the compute problems required to mine Bitcoin double in difficulty?
Exactly right. So every 10 minutes, the miners are rewarded for processing transactions on the network. And at the moment, it's halved from like 6.5 Bitcoin to like 3.25 Bitcoin every 10 minutes. So that means there's less supply coming onto the market.
Wow.
Yeah.
So as we enter this boom phase, people can probably remember the 2021 boom phase. NFTs stand out for me. There was a lot of excitement in that space. So as we enter the 2025 boom, what's different? What's similar? And should I try and buy a Bored Ape?
Yeah. These things are cyclical. And it's always hard to pick, cryptocurrency or blockchains are general purpose computing tools, and that means that people can build new use cases for the technology that can come to market in literally weeks or months and really surprise everyone. So it's really hard to see what's going to come to market next. But what we've seen recently, meme coins really come to prominence, and this is really driven by those early profits that people have made in Bitcoin over the past 12 months. And secondly, we've seen something called AI agents or autonomous AI agents come to market. We've all used ChatGPT and other AI platforms, but now there's these protocols that allow you to tie, a crypto wallet to an autonomous agent. You're able to give the autonomous agent instructions, for example, either give people advice on, what's happening in the market, or here's some funds to manage, increase the value of these funds, or it could just be an AI meme coin that tells jokes, right? But people are creating these protocols, setting the parameters and letting them loose on the internet, giving them a Twitter account, and now they're starting to interact with one another and create value. And it's this has really come out of nowhere. This started in November last year. Some of these protocols went to some of these memes and AI agents went to multi-billion-dollar valuations within weeks because of potentially the future that is possible with them.
There's always something in this space. That's the thing.
Yeah.
There's always something. Just before we move on, though, it feels like for maybe Bitcoin, like the veracity of or the intensity of the cycle is not quite as sharp as it has been in the previous few cycles. Is that because you've now got these big institutions coming in and just more consistent flow through the ETFs?
Yeah, that's right. The ecosystem is maturing, and there's this thing called diminishing returns. As the market becomes bigger in market cap, it becomes less volatile because the flows are more consistent, and you need larger buy and sell volume to move the market. And as a result of that, it hasn't been as crazy as other market cycles, but potentially we're still early. So hopefully there is a little bit of craziness coming.
There's always
What's the
craziness.
price target?
Yeah, it's really hard to tell. But we prefer to go by like time horizons as opposed to prices.
Yeah.
Because this 4-year cycle has stayed true for the last 15 years. So we can expect to see a market top later in this year.
Nice.
Yeah.
Nice. So I think one big difference, as I think about what's different between 2021 and 2025, is institutional embrace of crypto. And you mentioned the ETFs, and we've seen all the heads of big institutional banks come out and talk about it as part of a portfolio, which is probably different to 2021 and 2017. But the other big difference is the political embrace of crypto. Now, Trump captures all the headlines for courting the crypto vote, and he certainly did, but he wasn't alone. Kamala also tried very hard to court the crypto vote. So we're looking really at America, because what happens in America sort of flows through to the rest of the world. How do you think the political acceptance of crypto over in the States will affect the industry?
Yeah, it's going to change it dramatically. There was a lot of challenges with the previous administration around enforcement of crypto firms and how their businesses related to the legislation. The SEC, for example, wasn't really setting clear guidelines for the industry, but rather just going straight to enforcement and then letting the courts decide, which made it very challenging for crypto businesses to operate. Secondly, there was an occurrence that was dubbed Chokehold 2.0, where most crypto businesses were being debanked constantly, and this was really anti-competitive from.
And debank means they can't actually have a
they
traditional
lose,
banking.
Yeah, they lose their bank accounts, and often, this was anti-competitive behaviour from the banks, and Trump's come in now. He received a lot of campaign contributions from the industry. There's a few different lobbying groups that supported his campaign, as well as many crypto entrepreneurs and crypto firms. And as a result of that, I think that Trump's really embraced crypto. And the first major thing that he's done is set up a crypto council. And he's had David Sachs, a famous VC, help lead that. And say that he's going to stop debanking. They're going to create better legislation around market structures. And what's really exciting is potentially a Bitcoin stockpile or Bitcoin reserve. Currently, the US Treasury or the US balance sheet has a bunch of gold on it and other assets. And they're wanting to add Bitcoin to that as well.
Do you think that will actually happen? And I guess if it does, that's pretty meaningful if they start having Bitcoin as a strategic reserve.
Yeah, it's always been the vision. I think it's inevitable. Whether it happens now or later, it's just a matter of timing. But
inevitable, regardless of government.
Just regardless of which administration. If Trump doesn't do it, someone else will down the line. And we've seen other countries and jurisdictions do it already, such as El Salvador. But whether or not he's going to do it, I'll give it about a 30 to 40% chance. Currently on poly markets, people are placing bets around the 40% chance. David Sachs, is a crypto bull and one of the largest Solana holders. He'll be pushing for that, and we've recently seen that the US has come out and said that they're going to have a sovereign wealth fund.
Yeah, I think these two things are going to be interrelated, because Scott Bessent's quote was, "We're going to monetize the asset side of our balance sheet."
Yeah.
And I think that it's like they hold what, $500 billion worth of gold?
Yep.
And it's like they're not getting a return on that.
Yeah.
And that's going to tie in with this idea of the sovereign wealth fund.
Yeah, exactly.
Was it Sachs as well who's come out to say they want no capital gains on US crypto? Was it him? Or was it Trump Jr.?
There's been rumors around that, but I think that's not as clean cut of a statement as we would like it to be, because it could mean many different things.
Right.
It could mean, here in Australia, we have something called ESIC, early stage investment company, where you get an exemption on capital gains if you invest in crypto firms. But then capital gains tax on the appreciation of digital assets for individuals or businesses is kind of a different thing, and that can be structured in different ways, and we've seen that done differently in different countries, like Czech Republic, who said, once you hold your Bitcoin for longer than 3 years, then you don't pay capital gains.
Right.
They could be structured in 100 different ways.
Yeah.
Yeah, right. ESIC is for any early stage innovative company. We don't know if
Yes.
the government prioritizing
No.
Yeah,
crypto companies.
yeah, that's
Just
right.
to-
Yeah, that's
clear.
right. So it could be something like that to incentivize
A startup
investment.
media company.
Yeah.
Actually, we probably wouldn't qualify for it. I don't think.
I think we did.
I don't think we're innovative enough.
I can't remember, but anyway.
So, with Trump's embrace of crypto has come Trump's grift as well. Those two things seem to be interrelated. Any thoughts on Trump and Melania coins?
Yeah, it's just really interesting phenomena now that, cultural memes can be tokenized and then form communities, and people can, place bets on the success of that community and watch it evolve and change in real time. And this is particularly interesting because Trump did this 3 days or 4 days before his inauguration, and at one point he had 10 times his net worth on unrealized gains.
Yeah.
So
there was some Axios story which was like 95% of at its peak, and obviously it was like when it was fully diluted, so it wasn't real. But 95% of his worth came from the Trump coin, like 3 or 4% came from his stock. What is it, Trump Media?
Yeah.
And then it was like 2% from his lifetime of property development.
Yeah. It's really crazy to see the power of this technology and what these things can be used for.
So that's like a pretty positive spin on it. Do you not think it perhaps undermines some of the gains that crypto has made in mainstream acceptance for the president to be shilling his coin in this way?
Yeah, it definitely has. It definitely draws a lot of money from other parts of the ecosystem into meme coins, from real projects doing real things. But I think that these phenomena, these bubbles, this hyper speculation, really stress tests these networks. And we saw, just to give an analogy, like with the tulip mania in Holland, like 300-400 years ago, it was out of control. People were speculating on these things, and the value had nothing to do with reality, right? However, what we see now is that that's 300-400 years later, and the Netherlands is still the global center for flower manufacturing and distribution. Right, so we don't know how this technology is going to be used in the future, but we know that these activities are stress testing it and bringing attention to it, and onboarding millions and millions of retail investors. Yeah.
That's why Bryce still owns Hulk Tour coin.
Oh no! I was going to say I get the impression Blake's had a few meme coins in his day, but Hulk Tour coin. Well, let's talk about the major coins, or I guess Bitcoin and Ethereum, because at Bamboo that is what you guys are focused on.
Correct.
Why just those two?
The total market cap of all cryptos is $3.3 trillion US, right? And 2 trillion of that is just Bitcoin, and 300 billion of that is Ethereum, which makes up 70% of the whole ecosystem. Just Bitcoin, Ethereum is where all the value is captured. And then if we extrapolate that out to all of the projects that are built on top of Ethereum, that increases it to 85% of the whole ecosystem. That's where all the big capital is going to flow. And as well as that, we've seen lots of volatility there's lots of volatility in Bitcoin and Ethereum, but there's even more volatility in things like Solana that are still in the top 10 largest cryptocurrencies. But to just highlight how volatile it is, in the last market cycle, Solana dropped 97% of its value, and since then it's increased by 30x, 3,000%. So
yeah, that really helps your case why you don't have it. But,
yeah. Well, I just think it's really hard for people to manage this volatility.
Yeah.
It's so easy to get emotional and sell at the wrong time or buy at the wrong time, and really even the professionals get this wrong. and putting that into a product like Bamboo that's really designed for dollar cost averaging, for people to get in for their first time and start participating in the ecosystem, giving them things that can drop by 97% probably just isn't really a good move. But every day we get requests to put in some other coin, and we have to politely decline, but one day that could certainly change.
So I'm just having a look at Solana's market cap and their chart. So basically it did a full round trip. So from like its peak in 2021 all the way down, as Blake was saying, all the way back up to mid-January, basically flat. Well, like not flat, but same price. It's fallen a bit since then. But God, what a ride.
Yeah, it's a massive ride, and most people can't stomach it.
No.
I certainly would struggle, and that's why we just keep it to the blue chips or Bitcoin and Ethereum, because we think that's where a majority of the value is going to be created. And
well, you could have done a full round trip on Solana, or you could have invested in the S&P 500 in 2020. And if you just held the index in that time, you would have doubled your money. So there are plenty of ways to invest.
These Bitcoins now, though, particularly Bitcoin in this recent cycle, like traditionally hasn't correlated too much with the stock market, particularly like big tech. But I feel, at least, and I could be completely wrong because I don't have my finger on the pulse with Bitcoin, but it feels like it's somewhat over the last sort of 18 months or so has kind of had the same sort of flow with big tech. Is that just because of its market cap? Do you have a view on that, or am I completely wrong?
Yeah, no, it's becoming more and more correlated as it becomes more prevalent in everyone's portfolio, because Bitcoin and other digital assets are higher on the risk curve. When there is market volatility in traditional markets, people might look to conserve value by taking off their crypto trades, and as a result it becomes correlated. And I think there's really no way around this, and I think a big driver is quantitative tightening and quantitative easing. The more risk capital and more global liquidity there is, I think the more that crypto benefits, and similarly so does the stock market.
Makes sense.
Now, Blake, one thing that we really like about Bamboo is you guys have a real focus on dollar cost averaging.
That's right.
And we speak about dollar cost averaging in the context of the share market a lot, but I think there is no better case for dollar cost averaging when you're talking about an asset that over the long term trends up, but how it gets there is incredibly volatile.
That's right.
So can you help us understand what a consistent dollar cost averaging strategy would have looked like with some of these major coins, Bitcoin and Ethereum, over the past, I mean, you choose the timeline.
Yeah, for sure. Yeah. So, if you just invested $50 a week into Bitcoin since 2018, you'd be up over $100,000.
What?
Yeah.
How much would you have invested?
About $15,000.
And you would have over 100 grand.
Over $100,000. Yeah. So this is just
Since 2018.
Since 2018.
50 a week.
$50 a week.
Wow.
Yeah.
Is that
What's comparable to the stock market?
Well, it's not that good.
Yeah, I was going to say.
But wait, is 2018 because that's where it crashed after
that the
2017?
I'd have to double check, but
You've chosen like the lowest.
no, I definitely didn't do that.
You should have started in 2011. That would have been
yeah. We want to be realistic here. Most people didn't get in 2011. However, the compound average growth rate over the past 10 years has been around 50%.
Yeah.
Wow.
But then from the past 5 years, it's been around 20 to 30%. So, what people tend to use Bamboo for is medium-term savings. People DCA for 6, 12, 18 months, some people longer, and then they realize, hey, now I have enough to, buy a new car. Now I have enough to go on holiday, have enough to pay off my credit card or buy a gift for presents for my grandma or whatever. And that's what we see the people using the app for. And the average Bamboo user is now up about 65%. We just looked at the data last week. So, setting, forgetting, just doing a small amount is really helping people achieve their financial goals.
Yeah. I like the set and forget, because it is an asset class that can feel you can feel like you need to do something when meme coins are ripping, and it's just like that that roundup approach where you can just buy a coffee and it will round up to the nearest dollar and invest it without thinking. I think there's a use case for here use case in crypto.
Yeah, for sure. No,
How do you think about your crypto portfolio personally?
I don't try to overcomplicate it. It's so easy to go down the rabbit hole and start researching all the projects, look at all the narratives, look who's endorsing what and who's investing in what. And you could spend all day doing this.
Yeah.
But I don't have the time for that. I just have the blue chips, Bitcoin and Ethereum, and then maybe one or two really hyper speculative things just to keep me really on the edge of understanding what's happening on the innovation side.
Yeah.
So whether it's playing around with a new protocol or a new smart contract or a new decentralized application or a new meme coin, it's just really interesting to peer into these communities to see how it's evolving and how money flows in and out of them, really.
It's like your core and satellite.
Yeah, exactly. Yeah.
So I think that's a good segue into some of these emerging use cases. And I think, you co-host the Crypto Curious podcast, and between yourself, Trace, and Craig, you have your finger on a lot of these emerging projects and what's happening. So people, if they want a more in-depth discussion, should go and check that podcast out. You mentioned emerging projects, emerging smart contracts, a whole bunch of stuff that Bryce and I just do not have our finger on the pulse around. So what are some of those emerging use cases that we should know about?
Yeah, so I think you guys will find this one particularly interesting. There's a project called AI16Z, and it's dubbed after A16Z, which is a famous tech investor in Silicon Valley. This project has nothing really to do with A16Z, but they did receive a grant from Mark Andreessen and the firm to get them going. And like I just touched on at the beginning, it's an autonomous fund manager. So the mandate given to this AI agent that has a Twitter account and started off with $50,000 in its wallet was to increase the value of this portfolio. Right? And some of these have been able to 10, 20, 50x their portfolios. And what's really interesting about this is that these projects, these AI fund managers, they don't sleep. They can analyze vast amounts of data 24/7. They have no compliance costs, marketing costs, administration costs. Everything's audible on the blockchain. So you can see all the transactions. You can query it on Twitter to ask its decision-making process, why it invested in one thing or why it brought when it did. And this is maybe just a little bit of an indication of what the future could look like. You can pitch to these AI agents, and some of these AI agents are processing like 500 pitches a day. So if you have a crypto business and you say, hey, I think you should buy my token, these things are processing 500 pitch decks a day, where a normal VC fund might only do that a month or maybe even a quarter. So I think the costs associated with administering a fund like this is going to fundamentally change how funds are managed in the future. Not in the short, this is going to take a while, but it's already happening in a decentralized, really experimental way, and it's working.
It's fascinating.
Wow.
It just has made me think that not just in crypto investing, but just in funds management generally, the idea of having a fund manager who you pay even a percentage in fees to.
Yeah.
Do you just have a ChatGPT AI agent managing your money for you?
It's called the index.
Exactly.
Well, or you buy the index.
So just so I'm clear as well, like, and the difference between that is that it's built on a blockchain rather than using a large language model and whatnot. Like,
it still uses a large language model, but it has a crypto wallet attached to it and a Twitter account, so it can communicate with the public. It's basically tweaked LLMs that are specifically designed for this purpose. And there's protocols that have come out. That Coinbase has built one of them, a protocol where you can build your own AI agent and then let it loose on their blockchain called Base. So you
can go on Coinbase and get an AI agent to trade other cryptocurrencies for you?
Correct, yeah. It's actually on Base, which is their layer 2 solution built on top of Ethereum. So it's like their own blockchain. So you're not actually dealing with Coinbase, the company, but some of the tools that they've built.
Right.
Yeah.
Fascinating.
There is another one that's really interesting that just come about in the past 24 hours that I've seen. Now, on traditional markets, we have market makers on the exchanges that help make stocks liquid. And in crypto, we have a similar version of that, but it's crowdsourced liquidity. So if I want to participate in the liquidity of a particular token, I can deposit my funds and then receive a yield on that.
And that's staking.
It's depositing into an automated market maker. It can be sometimes called staking, but technically it's not.
Okay.
Yeah, but similar concept. And there's a platform on Solana called Radium, and last month they did $400 million USD in revenue just for the month.
For a month.
And they only have about 25 staff.
Wait, and so they're doing this crowdsourced market making.
Crowdsourced market making, AMMs, they call it, automated market makers. They're the tech provider.
Whoa.
And the fees generated were $400 million for 25 staff. And I just...
Fees
So
of
what, they're
400
making
million.
what?
Fees of $400 million.
So they're making almost $5 billion a year in revenue.
Yeah, 5 million with 20 staff. And I think just really...
my
But my
God.
thing with all these things is like how sustainable are they?
Yeah,
Like,
surely those fees get arbitraged away with competition.
because there's stories of this. I remember you coming in to do a very similar podcast like this 3 years ago and telling me of an Australian bloke who was making 300 million in revenue a month
Right.
on something. I can't remember what it
Okay.
was. He loved his watch, as you were
Yeah.
saying. Anyway, but like, is he still doing that 3 years later? Like, how sustainable are these?
Yeah.
Do you know what I mean?
Well, you don't
Yeah.
need many good months.
True.
Yeah, it really depends on volume. There was a lot of volume on Solana due to the Trump coin in January, and as a result, they had a spike in revenue. However, I think what I'm really trying to get at here is that the power of the technology allows very small teams to automate really interesting products to generate outsized revenue that currently is not possible in traditional financial markets because there's so much red tape and infrastructure and people required. Like these firms with 25 people are doing more revenue than BlackRock. You know what I mean? And BlackRock has tens of thousands of staff as an asset manager. And Larry Fink has come out and said that tokenization is the future of equities, bonds, everything, and he's going to be pushing for that to be the core settlement layer of traditional markets. And I think these things are really MVPs, right? That we're seeing in the current crypto ecosystem for broader adoption. And I hope as part of the legislation that's being drafted gives these big financial institutions a pathway to start seriously moving assets across to this infrastructure.
Now, not quite more than BlackRock. BlackRock does about $5 billion a quarter, but still,
Yeah.
pretty
Still.
impressive.
Oh, really? So,
Close
my
enough.
mistake. Yeah.
So how do we get a piece of the pie?
Well, yeah.
You dollar cost average into Ethereum
Yeah.
and Bitcoin on Bamboo.
No, that's not.
Yeah, that's right. Well, 80% of the value flows back to Bitcoin. And
Nice.
Ethereum.
Yeah,
But of course, you can go down the risk curve, but you're going to have wins and you're going to have losses, and you're going to have to put a lot of work in to manage that. So, choose your own,
wild.
choose your own adventure.
So,
wild.
so my big question with all of this, and I think, last time we spoke, I probably had the same question, is when do some of these applications cut across to mainstream adoption? Because for me, what I want to see is like the market maker that you're speaking about starts to challenge not build a parallel business market making in the crypto world, but actually says, hey, our technology is better than existing market making technology. Or, similar like DeFi applications and crypto banking and all of that stuff actually starts to challenge mainstream technology or cross-border payments or whatever it is. So are we seeing any of those use cases emerge where something that started in the world of crypto has jumped over the chasm and is starting to get mainstream non-crypto adoption?
Yeah, I think the key one to speak about is stablecoins. Now, stablecoins are coming to prominence. They've been growing at an incredible rate, and we're starting to see stablecoins in our checkouts when we're using Stripe and other checkout providers like Shopify and stuff. We'll start seeing it there where you can pay with USDC stablecoin that's on Ethereum or another blockchain. And what we're going to see is that these stablecoins are rolled out in applications like Telegram. Telegram has gone pretty heavily into implementing different blockchain technologies and onboarding hundreds of millions of people into the ecosystem with blockchain-based games. And as soon as stablecoins are dropped into these ecosystems for payments to transfer value, I think that people will be using them because they're cheaper and much quicker and more efficient than using traditional rails. So this will be, I think, the first big one that will enter our lives in a seamless way.
And just for people who are unsure, what is the benefit of paying with a stablecoin on a Stripe or a Shopify rather than just using currency?
Yeah, so if you use your credit card or your debit card, there can be like a 2% or 1% surcharge, and then the vendor, it can take weeks for them to receive it. But with a stablecoin, it happens instantaneously for very low cost. And people don't need to have a debit card or be part of legacy banking systems in order to participate. So it means the velocity of exchange can happen at a higher rate, which I think is better for everybody.
Yeah. Nice. Well, Blake, to close out today, some pretty interesting use cases that you've put forward, but are there any other applications that are really that haven't necessarily broken through, but you are watching? Yeah,
there are a few really interesting ones. One that is related to stablecoins that I think that you guys would find interesting is called Athena. And it's a delta hedging strategy that currently retail investors don't have access to. And what this means is, just to give a simple example, is that the organization, Athena, buys Ethereum and then they short the futures, which creates a delta neutral strategy. And then as a result of that, they mint a stable coin because it's completely hedged, right? But it picks up a yield of 10 to 20% per annum.
Where's the yield coming from?
From the futures, the leveraged futures. The delta on the price between the spot and the futures, right? And then that's completely passed on in an automated way. So this is currently...
Is that like a covered call strategy?
Yeah. It's a covered call strategy. They're tokenizing a covered call strategy, which is used by sophisticated investors and hedge funds, and retail investors don't have access to. But through the automation of this strategy with smart contracts, it allows everyday people to now have a stable coin that's very low risk, and it's still high risk on the curve, but in the ecosystem, it's a tried and tested strategy, and allows people to get a high yield, 10+%, and a stable coin. And I think this is a real innovation, and I think that these types of products that are coming to prominence are really going to change the way that things are done.
Wow.
Fascinating.
10 to 20%, not bad.
Not bad. We Bryce and I got rugged on a coin back in 2021, and we got enticed by the yield on that. We got sold by someone quite reputable, and we won't say who it was, but we went in for the yield and then we got rugged, and it wasn't great. But
lesson learned.
Yeah. And there's just one other item I'll touch on called Bitcoin DeFi. Bitcoin, there's $2 trillion of Bitcoin out there, and currently it's not being put to work. It's very hard to do decentralized finance or lending and borrowing with Bitcoin in a decentralized way. And there are protocols coming online now, many that are trying to facilitate people to stake and borrow against their Bitcoin and take loans against their Bitcoin in a decentralized way. And I think that once these come to prominence and they're tested at scale, it's going to create a lot of value in the ecosystem, because then it's going to allow people to borrow against their Bitcoin to buy houses, to invest into new crypto projects, or generate a yield from their Bitcoin, which is really going to spur the ecosystem. So this is really exciting. I think we're going to see this more and more over the next 12 months.
Nice.
Yeah, fascinating.
Wow.
Well, it is an interesting space, Blake. We'll be watching, but if people want to keep in touch with them more, Crypto Curious is the podcast. Once a week they can be kept up to date. Bamboo is the app if they want a dollar cost average into Bitcoin, Ethereum. Gold and silver as well, we should say.
That's right.
Gold's been good.
Exactly. Those people that have been holding gold have done well.
Yeah. But Blake, we really appreciate you coming in and sharing all your insight with us today.
Thanks, guys. Thanks for having me.
Thank you.
I will say this about investing. Everything you do learn is cumulative. What I learned at 20 is useful.